So welcome everybody, welcome to the first of our fabulous Friday masterclasses, MIDAS masterclasses. So it's my great pleasure to introduce Debra. Debra Adams is not only a very good friend and colleague, but she's the founder of Arena for Finance, which is a company focused on all things hospitality finance. So Debra will not tell you herself because she's very modest, but she's had an extensive career in the hospitality industry. And she really specialises in helping operations managers to get to grips with the management accounts and financial statements. And also she does advising on things like pricing and cash control and managing the bottom line. So Debra started out in frontline of hospitality sector, working in operations, in hotels and restaurants. And she's retained a passion for the sector ever since. So you can find more about Debra from her website at Arena for Finance. And she's very kindly come along this afternoon to lead our masterclass on money matters. So we are recording this session, just so that you know, and you might find it helpful to have your mobile phone with you because we're going to be running a few quizzes and things as we go through. So that's enough from me. Welcome everybody, and Debra, thank you very much, and over to you.
Thank you very much, Hilary, and I'm absolutely delighted to be here for this very first masterclass for the MIDAS project. It's a very great timing, and obviously the first topic this month has been all about finance, a topic which of course is essential in the current times. So I'm going to be talking today a little bit about cash, a little bit about profit, and a little bit about performance measures. And during the course of this month, the MasterInnholders with the MIDAS project and with Hilary's input have been focusing all on financial fitness. And I would really recommend having a look at the other resources that are currently available. Staying Financially Fit in 2021, which is a great video with Chris Todd and Mitchell Collier talking about top tips for managing your own personal finances during this time. And I thoroughly enjoyed the video. I certainly took away some points myself, so well worth having a look at that. And I'm going to be building on some of those thoughts in our session today. So I'm going to be looking at different aspects of hospitality finance, obviously fairly briefly through the hour that we have together. There is an opportunity to ask questions as we go. So I've got a few screens going here, so that's why I'll be looking around as I'm talking. I can see the chat screen, so if you want to ask any questions as I am talking through the various topics, then feel free to do that. There will be a couple of polls to get some responses from you to help me in terms of gauging the level and the topics that you want to talk about. And at the end, as Hilary has mentioned, there will be a quick quiz, 10 quick questions using Kahoot. And to access that, it's great if you do that with your phone. So if you use your main screen, if you have a separate screen today, to see the scoring of the quiz, and then on your phone answer the questions using www.kahoot.it, and I will give you the code to enter a little bit later on. So to start us off, I'm going to start us off with a little poll where I'm going to ask you a few questions. So I'll just give you a few moments to answer the questions there. Lots of responses coming in. I'll still give it a moment or two. It's still clearly picking up all of your responses. That's amazing. Thank you for contributing. Okay, so I'll share the results with you. Hopefully you can see those. So we've got quite a mix in the audience today. So I'm going to be looking at finance from a fairly introductory level, but I'll also be including some particular points for you as tips to take away as well. So tips for cash flow and tips for profitability. So let's switch to the first couple of slides. So as I said in the introduction today, we're going to be focusing on cash, on profit, and on performance measures. Now, if you've had a look at the video, Staying Financially Fit with Chris Todd and Mitchell, you'll know that there is a focus there on cash flow. And cash, of course, is absolutely essential at the moment in terms of having sufficient available in order to survive, to get through this really, really challenging period, something that we've never seen before. I've never seen anything like this in my lifetime. But I do think that the light is at the end of the tunnel. The tunnel is a bit longer than we thought it was going to be, but I think the light is there at the end of the tunnel, and I think we can anticipate a bounce back when we get to into that light. So in the session today, I'm going to talk a bit about how to keep going, particularly with cash, and then how to keep looking forward to making a profit in the future. So let's look first of all at a very well-known phrase. You may well have come across this before. Revenue is vanity, profit is sanity, and cash is king. Well, of course, in reality, all three of those things are very, very important to our business. But at the current time, when many of us are closed or with very reduced revenues, then cash is key to enable us to keep going during the next few months. Profit, translation of revenue into profit, obviously that's essential in order to grow our business back for the future. And of course, profitable revenue is key as well. But I'm going to start off by looking at cash flow. Now, everyone does a cash flow, and I'm sure that you're used to preparing cash flows for your own finances. And preparing a cash flow in business is, of course, equally important, especially in the current environment. So cash is different to profit. Cash is what you actually have in your bank account to enable you to pay your suppliers, to pay your bills, and to pay your wage bills. But where does cash come from? Well, in our personal finance, cash obviously comes from the money we earn, and we perhaps may have some other income from investments. In business, cash would normally come from our revenues, so from our customers, and those customers may pay cash in our businesses, or they may we may offer credit to them, and then the cash might come in 30 days later, 40 days later, maybe longer. So that is usually our main source of cash coming into the business. And we may also have investments within the business as well that generate dividends or other returns. But during these very, very difficult times, we'll also be using other sources of finance as well. So bank loans, possibly share issues, and grants as well. And there have been a number of government grants available to support businesses in the hospitality sector. Some of those are national and some of those are more local, and I'll talk a little bit more about that later on. And so on the inside, we've got a range of possible sources of that cash. And then the cash outflows, well, just as it is with your personal finance, the cash outflows are your bills and your expenses. But of course, in a business, we also have the payroll, which is usually a substantial outgoing in terms of the cash flow, interest on bank loans, repayment of those loans, expenditure on CapEx. So the purchase of assets, and CapEx is capital expenditure, and of course, taxes. And so during these really difficult times, what we're looking at with the cash flow is to find ways in which we can balance this inflow of cash and the outflow of cash in order to maintain a positive balance. And so just in the same way as when you look at your bank statement and you analyze your inflows and your outflows, then the same applies with a business. We look at the opening bank balance, the cash coming in, the cash going out, and that gives us our closing cash balance. And hopefully you're all doing this sort of cash flow in your personal finance as well. And I know that's been a strong theme during the MIDAS project during January, is to also be focusing on your personal finances and looking at managing those and revisiting all of your expenses to see whether they're essential and where you can make savings. And so when we look at this in the business context, Now, hopefully this is not a too scary picture up on your screen at the moment, but preparing a cash flow in your business can take this sort of format, and you can use the same format for your personal finances as well. And so what we see on the screen is very traditional format here. At the top, we've got the cash coming in. So normally our cash flows will be coming from these sorts of sources, cash sales and the sales that were on credit to our customers. And the key thing when we plot a cash flow like this is that we have to be realistic about when will the cash actually come in into our bank account. And that way we get a realistic picture of what the closing balance is going to be. So if I take your eyes down to the bottom of the screen, so down right at the bottom, we've got these closing balance figures, and you can see straight away on my example that in January, we're going to have a negative closing cash balance. But we could do some things with this cash flow to try and overcome having that negative cash balance. So this style of cash flow, where you've got at the top the money coming in, so if you're doing this for your personal finances, that could be your salary and any other sources of income. And in a business, it's usually revenues coming from our customers. And in the current environment, it may also include additional bank loans through this very difficult period, grants from government and from local authorities, and possibly a share issue, an issue of equity to bring more finance into the business. And all of that is part of the cash flowing into the business. And then we need to list all of the costs, not just the operational costs, not just the payroll, but also capital expenditure as well. So maintenance and replacements and anything that we're currently having to invest in the business. This all needs to be included in the cash flow so that we get a picture of what balance we're likely to have. Now, when cash flow and when finances are really tight, it's quite tempting to feel, particularly in your personal finances, I can't bear to look. That's a topic that's discussed in the Staying Financially Fit video. And I know how that feels. I've had times in my life when you have that feeling, but you've got to be proactive, and it's actually quite therapeutic to sit down and do the cash flow, look at the picture and work out the action plan to go with that. So this spreadsheet is very simple design. If you'd like a copy of it after the session, just let myself or Hilary know and I'll pop a copy over to you. It's designed so that you can put in your values and everything is calculated for you. Now on the screen at the moment, you can see with this cash flow, there are some quite significant costs, the rent of the business, the rates of the business. Any suggestions in the chat room as to how we could improve the cash flow for this business? What could you do with some of those big chunky payments? So I'm looking at, in particular, let me just highlight it on the screen for you. I'm looking at these figures here and these figures here, and maybe this one down here as well. So we've got significantly large payments there coming in just a couple of months of the year, in January, in July, and I'm getting lots of spread them. Excellent, yeah. Lots of spread these costs into monthly payments. Thank you, Natalie. Split over the months from Georgina. Perfect, yeah. So an ideal solution here would be to try to work with the landlord for the rent to see whether you can get a payment holiday, or whether those payments could be spread over time. So a payment holiday can really help to manage the cash flow, but it is only a holiday, it's not a break. So if we were to, for example, negotiate that we weren't paying rent in January, February, March, we'd still have to pay it later. But that might help us to get through a very difficult time, to be able to spread the costs in that way. But of course, our landlords have also got their costs to meet as well. So we've got to look at both sides of the situation. And with the rates, again, this is another area where we're looking to the government to give us some more assistance here in order to reduce rates and spread the cost of those. So yes, this is what we need to do with our cash flow, is to get the overall picture, and then we can start to look at, well, what actions can we take to improve that cash flow? So you can do a very similar activity for your own finances. There are tools around that you could use instead of a spreadsheet for your personal finances. So if you've got a Monzo account or a Starling account, they do quite a lot of tools within those accounts to help you to plan your cash flows. Okay, so I'm going to launch the second poll for today. So could I ask you to take a moment to answer these questions? Okay, thank you for that. And let me share the results with you. Okay, so 51% involved with the monthly profit and loss account and focusing on improving profitability. Only 7% looking at the cash flow situation. I wonder if that's, if we feel that in many businesses, cash flow tends to be something that's done at a very senior level in the business, which of course is important, but actually all of us in the business have a role to play in improving the cash flow. You might think, well, how can I impact on the cash flow? But simple things like giving credit to customers, how long customers take to pay can impact on the cash flow, as you can see from the diagram on the screen. And also purchasing from suppliers. So when we're purchasing with suppliers, negotiating the best possible terms, paying for supplies, getting credit, so that we can just push those payments a little bit into the future, and that will help the cash flow. And another tip is not to over purchase on inventory, because basically when you're buying inventory, you're removing cash from the bank account and placing it in the storeroom. And of course, you need enough inventory to meet the demand, and particularly when there's bounce back, and we'll talk a bit more about that later on. But equally, you don't want to have lots of cash tied up in inventory either, because you can see the impact that would have on your cash flow statement. So in the hospitality industry, and in fact in any industry, we can classify our costs into categories. So some of our costs are variable. And on the screen, I'm illustrating what that means with just a little graph to illustrate how the cost changes. And what the graph illustrates is that as we go from no sales, so down here at the origin, this is no customers, as we increase the number of customers by going across this graph across the bottom, then the cost increases. And so these are all costs that are incurred when we have a sale. So food and beverage cost, so the cost of the materials, so the cost of the food on the plate, the drink in the glass, these are all examples of variable costs. You don't have the cost, or you're less likely to have the cost if you don't have the customer. Cleaning a bedroom, so the cost of cleaning the room after the guest has stayed in the room, and the cost of acquisition. Now, the cost of acquisition is the cost of getting that booking from the customer. So the cost of acquisition could be the percentage that you pay to an OTA, for example. in order to receive that booking in your operation. So variable costs are a little bit more flexible because they're costs that we can turn on and off. If you're closed and you don't have business at the moment, then your variable costs will be much lower, or ultimately coming down to zero. But in the hospitality sector, we have lots of fixed costs. And so many of the costs in your P&L and also featuring in your cash flow will be fixed costs. And as you can see from the graph, these costs are at the same level. So over here at the intersection with the axis, these costs are at the same level, even if you don't have any revenue at all. And this is the big challenge for us in the hospitality sector. Payroll is one of those costs, rent, utilities, insurance, business rates. So these costs are much harder to reduce without taking drastic action. And I know that many of you are in businesses where drastic action has had to be taken. And what our businesses are trying to reduce these fixed costs so that we can keep a positive cash flow, so that when bounce back occurs and comes in the future, we'll be able to reignite our businesses. But in the meantime, we really have to focus on these fixed costs to look at innovative and creative ways of how we can reduce those costs. And I know in some cases that's had to be very, very radical and painful as well. So another solution is looking at how we can re-engineer some of those costs, those fixed costs, to turn them into variable costs. Now, obviously, with the examples I've got listed on the screen, it's not necessarily going to be possible to turn many of those into variable costs. But perhaps moving permanent employment contracts onto variable contracts might be one option. It does bring a variety of issues with that, but it's a possibility. And looking at ways in which we can stagger some of those payments. So it does require quite a lot of creativity to look at how we can try and turn some of those fixed costs into variable costs, but you can see why we would want to try and do that. So second tips for managing your cash flow. When I started out, I actually had quite a few more, but I decided to just come down to key 7 tips so that they were a little bit more powerful. So the first one I've mentioned already, try to reduce your expenses, of course, to improve cash flow. Focus on the fixed costs. How can you reduce those? Either we've talked about a cost holiday, deferring the cost. In the chat room, a lot of you mentioned about spreading the cost. But as you can see from the list that's there, it's not going to be possible to do that with all of those. Renegotiate contracts. So particularly for things like rents and rates, and thinking about how we can try and reduce those costs to help us through this period. These are not easy things, I do accept that, but we do have to investigate to see what we can do in each of these areas. Plan how much cash you will need for the next 6 months at least to cover your current commitments. So using that cash flow statement that I illustrated earlier and just putting the numbers through that and looking to see, well, how much cash do I need to cover my current commitments until we can open next, then beyond that as well. So through the year, through 2021 and into 2022. So with these cash flow statements, do the first one, do it for at least 12 months, and then keep updating it. Now, the version I showed you on the screen was month by month. I expect in many of your businesses, the cash flow is being done weekly. And I've certainly come across clients who are doing cash flows daily. So a spreadsheet with 365 columns, so that they are really daily focusing on where they are with that cash balance. What cash can you generate during this time? Well, there's been an amazing amount of innovation in the hospitality industry, whether it's takeaway food boxes, a range of different new ideas for generating sales during this time. And obviously, all of those sales help us to improve the cash flow, as well as maintaining a relationship and profile with our clients as well. Taking advance payments, and I know lots of hotels have been doing this, taking deposits, selling gift vouchers, advance payments for when the business reopens. I think there's a huge amount of pent-up demand out there. And people are looking to look ahead to life after this current crisis. And this is also a very useful way to bring cash into the business as well. Check what grants are available. There's a lot in the press around grants for the hospitality industry. Keep an eye on organisations like UK Hospitality, because they are working tirelessly on the behalf of the industry to improve in this area. But also check with your local authorities, and not just the national grants, but look at the local authority website pages. And so I'm based in Dorset, and I'm signed up with Dorset County Council, and I get regular email updates once a week, which tell me about what grants are available, what additional support there's available for business, because there are some regional differences. So it's well worth making sure that your business is keeping an eye both nationally but also locally on what's available, and also for you personally as well. So there's also help for people on an individual basis. So it's well worth signing up for those updates so that you can keep an eye on what's available. And as we move to what I hope is going to be a bounce back in not the too far distant future, work with your suppliers. Obviously, they are hurting as well. So, we've got to look at both sides here, but take credit where you can when you start to repurchase inventory for when we're able to reopen our businesses. Okay, now keep the questions coming. I'm having a look at the chat room. If there's any questions on cash that you'd like to ask, just before I go on to look at the income statement, the profit and loss account in a bit more detail. Any questions on cash flow that anyone would like to ask at this point? As I say, the Excel spreadsheet is available if you'd like to have a copy of that, either for your personal finances or for your business. So I've got a couple of questions in the Q&A. Lovely. Okay, so Kelly, with the ongoing pandemic and the uncertainty of not knowing when businesses will be running back to normal, what are the best strategies to take to reduce other costs in the business? Well, I'm going to be looking at that in a moment, Kelly. And really what I think is a good strategy at this point is to use the time that we have to really investigate the cost of every activity. And I'm going to be giving some examples of that in a moment. So I'll come back to that one, Kelly. Spence is asking, or is saying, renegotiate contracts. I have long-term contracts of 5 years with suppliers for the properties. How can I reduce it to a smaller agreement if it's set for 5 years? Well, I think it's opening the conversation really, and just to see what might be possible. But I can understand your issue and the problem, with the contracts having been set for those 5 years. But these times are so different, so unusual. I would, give it a go and see if it's possible to have a discussion with the vendor there. And why is payroll considered a fixed cost when you can flex it to a degree? Well, payroll's often a fixed cost when your employees are permanently employed. So, if you're receiving a salary and it's the same salary every month, then you are a fixed cost in the business. Employees who are on flexible working hours or employees who are working on casual arrangements, then those would be the elements of cost that you could flex. So that would be the variable element of the cost that you could flex. So thank you for those. And now let's have a look at the profit and loss account. Now this statement is the one that in the poll you've told me that the vast majority are using on a regular basis. Now, if we just remind ourselves of the profit and loss account in the hospitality industry, profit and loss account is different to cash flow because the profit and loss account is based on the concept that we match the sales to the costs. So when we look at sales and turnover here at the top of this little mini statement, those sales may or may not have been received by the business. They will have been invoiced, so the customers will have been invoiced, but the sales might not have actually come in yet. But we need to show the sales because we have transacted them and we've had the costs. So in the profit and loss account, it's all about matching the revenue that we've transacted with the costs of delivering that revenue. So equally, all of the costs may not have been paid yet, or some costs may have been paid in advance. But what we see in the profit and loss account is the cost that's been used. So we match the cost to the revenue. So this is a very mini version of the profit and loss account. In your own monthly packs, you will have the actual figures compared to last year, compared to the budget. But I'm just going to focus on the structure of the accounts. Now, in the hospitality industry, the layout of our profit and loss account is governed by something called the Uniform System of Accounts for the Lodging Industry, the USALI. And if you have a chat with someone in your finance department, they'll be able to probably show you a copy of the USALI. And it's a guideline on how to lay out the style of the profit and loss account. And so what we tend to do across most businesses in the hospitality sector is obviously collect all of our sales, our revenues, and in a more detailed diagram, this would show rooms, food and beverage, and other parts of your business. And then we list the costs. So we've got, for this example, it's accommodation. So the cost would be all accommodation costs. And the cost of acquisition is the cost of getting that booking. So the OTA fees, the travel agency fees, and the cost associated with bringing that business into your operation. The payroll cost for that department and the operating expenses. So we end up with our operational profit, the profit associated with accommodation. So that figure that I'm just roughly highlighting there is the accommodation operational profit. And then all our other departments would have their operational departments as well, all of our revenue generating departments. And that contributes to the overhead, and that's called in the USALI the undistributed operating expenses. And in here, we would find departments like sales and marketing, IT, administration, and utilities would fall in this section, undistributed operating costs. And then a very important level of profitability is something called GOP, the gross operating profit. So the gross operating profit is based on the operational profits from all of our revenue generating departments. So accommodation, food and beverage, and other departments. They all make a contribution to the overhead, which is the undistributed operating costs. And that creates something called gross operating profit. It's not the final profit, but it's a really important level of profit because this tells us whether we are making a return from the various aspects of our business. And then we have a range of other costs, management fees, possibly fixed costs, before we get to something called EBITDA. And EBITDA stands for earnings before interest, tax, depreciation, and amortization. And EBITDA is something that all businesses across all sectors, not just hospitality, will talk about. So by the time we get down to EBITDA, we're looking at something which is similar to all sectors. But gross operating profit, in terms of the definition, is quite specific in the hospitality industry, in that it's the revenue less our costs and our central costs to arrive at GOP. Now I've included the percentages all down the side here as well. Of course, these will vary hugely from business to business, and they will be very different at this point in time as well. So just to remind us what goes into each of these values, the sales will be made up of the average spend, so the average room rate if we're talking about accommodation, multiplied by the number of customers or the occupancy of our business. The cost of acquisition is a variable cost, so it's based on the number of customers that we are receiving. The operating costs are a combination of variable and fixed costs. So there's payroll in there, insurance. Insurance won't be in there. That will come later. So payroll will be one of the main fixed costs there. And then our undistributed operating expenses, largely a fixed cost. There may be a little bit of variable in there, but it's quite a significant fixed cost in the business. So let's have a look, for those of you who are perhaps working on the food and beverage side, how the statement would look. So again, the layout of the food and beverage statement for the F&B side of the business is governed by the uniform system. And the uniform system recommends that we start with our revenues, our turnover, and then we look at cost of sales, which is the cost of food and the cost of drink that's been consumed during that period. Then we have the payroll and related costs. Remember, those are both variable and fixed, our operating expenses. And then that department makes a contribution to the undistributed operating costs as well. So we said at the beginning of today, I certainly believe that the light is now showing at the end of the tunnel, and that we can be thinking about building back to profit. What sort of things should we be focusing on? Well, I would use this time to focus on updating your costings for all of your products and services, making sure that you know the cost of everything that you're providing, selling in your department. And we can divide those costs into the fixed costs and the variable costs. Now, for this, focus on the variable cost. What is the cost? So it's also called the marginal cost. What is the cost when we make that sale? And really go through every element of that cost so that we understand exactly what it's costing us to provide, whether it's a product or whether it's a service. As we build back the business and the revenues, you might want to consider reducing the range of products that you're using. And this is particularly for food and beverage. So take a look at the number of ingredients, for example, that you need in order to work with your current menus. See if you can achieve some economies of scale here. By having lots of ingredients incurs lots of additional cost. So have a look at the total picture. Perhaps offer slightly less products and think about what goes into each of those products to help you to manage your cost of sales and gross profit, particularly on the food and beverage side. And adapt the products and services to make sure that you're still meeting your target profit margins. We're starting to see a little bit of inflation creeping in at the moment, and we're starting to see an increase in some costs, particularly in the food and beverage area. So with perhaps the cost of imports increasing. So it's well worth spending this time doing some review of the costing structure and ensuring that the selling price is going to deliver the returns that we're looking for. Focus on direct business via your website. I mentioned the cost of acquisition a few times in the session today. The cost of acquisition is what it's costing you to bring each customer into your business. And this is perhaps something more for the accommodation side of your business. Find out what the cost of acquisition is for your business. How much are you paying the OTAs and the percentages on those bookings, and review your website. So often we don't have time to do all of these things. We're so busy with the current business, but at the moment there might be a little bit more time to review your website, look at the customer journey end to end, and is it easy to make a booking? Is it easier for customers to go to OTAs rather than booking through your own website? It's well worth taking the time to just review all of these elements whilst we can. Review your past data for trends, but when we bounce back, it's likely that we'll be looking at some new market segments. Travel may well still be limited, so there may well be opportunities in your local markets, or thinking about how you can work with the UK-based customer, or a customer based within your own country if we've got people dining in from overseas today. Plan how you will manage demand when bounce back comes. This is something for the revenue managers in your business. I think there will be big demand when we're able to travel and move around more than we can at the moment. So what do you want to sell more of? So having reviewed your costings for all your products and services, think carefully about what it is you want to sell more of in the future, and obviously what's going to contribute to profitability to give you that bounce back quickly. Keep in contact with your customers, let them know what you're planning, when you'll be open and what will be available. And as I say, I think there's a lot of pent-up demand out there currently, but it's making sure that we maximise the benefit from that as we start to reopen. Okay, I'm just going to go across the chat room. Could you please explain the importance in ensuring ex-VAT figures on P&Ls? So when we look at the profit and loss account, everything is shown on an excluding VAT basis. So if I just take us back to here, so the turnover, the sales here, is going to be net of VAT. And we've always presented our figures in that way. And that's partly because VAT can change, and we have seen changes there. But it also enables us to match the cost to the net sales that we're going to be receiving. So when you're charging a customer X pounds for room rate, then a portion of that room rate is going to be the VAT, and a part of that will go to the inland revenue as VAT payment. So we show in our profit and loss account all of the figures net of VAT, but of course VAT is important to be accounting for, because if I take you back to our cash flow statement, so apologies if this is flashing by on the screen. If I take you back to the cash flow statement, then VAT will need to be in here. I haven't listed it as an example, but it would need to be in the cash flow statement as well, because you're needing to show when you need to pay the VAT to the inland revenue. The inland revenue have given some payment holidays on VAT over the last 9 months or so, but ultimately it still has to be paid. So planning out your cash flow 12, maybe even 18 months ahead will help you to track, to make sure that you don't forget that those payments will need to be paid. Does that answer the question for Adam? Okay, so we've just had a quick run through 7 tips for building back the profit. So one of the tips for building back the profit was to review your costs. So I've just got a little mini example here. This is the cost of an occupied room. So it's basically, what is the cost of preparing the room once it's been occupied? So in my example, I have taken as the starting point an average room rate or a room selling price of £350. And then I've listed all of the costs that would be incurred when that room has to be prepared to be sold again to the next customer. And those costs are the variable costs or the marginal costs. And it's well worth doing a little costing sheet like this. Probably have a few more things on it than I've got. I just wanted to have a basic example for this session, so that you can then see what are the total variable costs and what is the contribution. Now, the contribution is the selling price minus the variable cost. So you can see on the screen, I've got £350 is the selling price. £105 is the variable cost. So that leaves us with a contribution of 245. That figure is not the profit from the room, it's the contribution towards those fixed costs. And obviously, if we can increase the contribution, then that helps us to cover those fixed costs more easily, and it helps us to get past our break-even point more quickly. So ways to increase our contribution is either to have higher selling prices or to have lower costs, or a combination of the two. And I'm bringing up this cost of acquisition again. So here I've got in a booking cost 20% of the room selling price, which is the sort of percentage that some OTAs charge. So it sounds maybe that I'm negative about OTAs. I'm not. I'm just highlighting the importance of understanding your business. And if you're able to bring more business yourself in directly through your website, then obviously that's going to reduce your costs. But if you're building your revenues, then of course you need all the drivers that are available, all of the channels that are available. But this is the sort of thing that your revenue manager will look at. You know, what will be the rates as we bounce back, and what market segments do we want to attract as the business comes back to buoyancy. So in our final section, I was just going to talk a little bit about some ratios, some performance measures. So I'm just going to launch the final poll. Here we go. So this time, I'd like to know, which of the following ratios do you use in your business on a regular basis? So just whilst you're answering the poll, I've got a question about the cost of acquisition. Is it the agency commission, or does it include the internal sales reservations employee? Normally it's the agency commission. So it's normally the additional commissions that you charge, that you're being charged, should I say. I just had a comment from Thomas. Would be great if we could select more than one answer. Yes, actually, I should have done that. So I expect that a lot of you are using all of these measures. So RevPAR is the revenue per available room. TrevPAR is the total revenue per available room. GoPAR, which is getting less, but maybe that's because everyone had chosen the other options. Gross operating profit per available room, or not really sure at the moment. So RevPAR is a key measure for understanding our revenues, average room rates, and occupancy in the business. And of course, at the moment, and as we reopen, it's going to be very challenging to compare that to the previous year, which is what we would normally do. And so instead, we should be thinking about tracking how this changes on a week-by-week, month-by-month basis as we build the business back. So I'm just going to have a look at RevPAR, TrevPAR, and GoPAR with an example. So let me just bring that up onto the screen. Okay. I'm guessing from the poll that the majority of you are using RevPAR in your hotels. RevPAR is the total rooms revenue divided by the rooms available. So that's different to the average room rate, which is the total rooms revenue divided by the rooms sold. So RevPAR gives us a wider picture in terms of the performance of the business. With the example that's on the screen, We're a hotel with 100 rooms and an average room rate of 90. Over the last quarter, the hotel's achieved an 80% average occupancy rate. Now, if we assume that there are 90 nights in the quarter, so 30 nights per month, then we can calculate the total number of rooms available and use that to be able to work out the RevPAR. So the total rooms revenue divided by the total rooms available over that period gives us a calculation for RevPAR. So that's an average here for the quarter. You will be also doing this calculation on a nightly basis, a weekly basis, and on a monthly basis. We can also calculate RevPAR by taking the average room rate and multiplying it by the occupancy. So there's a second route to working out the RevPAR. And so that's giving us an idea of how well we're using all of the room stock. And so the RevPAR will always be lower than the average room rate unless we have 100% occupancy. So RevPAR is a very useful measure, but with that, it's also useful to look at TRevPAR. So TRevPAR is the total hotel revenue. So by total hotel revenue, so I'm now looking down here at this section here on the screen. So TRevPAR is the total hotel revenue, which is accommodation, food and beverage and everything else, divided by the rooms available. And this is a useful measure, particularly when you want to track your efforts in selling other parts of your business activity. So if you're you're aiming to increase food and beverage sales, for example, you've got lots of initiatives in place to do that, then TRevPAR helps you to measure if that's working, if those activities are working for your operation. So TRevPAR is a very useful measure to monitor as well. And then the second option in that box, or second ratio, is GOPAR. Now, GOPAR stands for the gross operating profit per available room. And so we saw the GOP earlier in the income statement, so the gross operating profit, and then we divide that by the rooms available. And this is a very useful measure for understanding whether the revenues that we're generating are creating sufficient profitability. Now, obviously, during bounce back, we're going to be gradually working on turning this figure positive, the gross operating profit, and dividing by the rooms available. And rather than comparing all the time just to last year or to the budget, it's going to be also with that useful to look at how we're inching those values back up month by month as we come through the bounce back, so that you can track how your business is performing. And so for our friends in food and beverage, some measures here that are useful to use as well. So RevPASH, revenue per available seat hour. This is a really useful measure for looking at, I'm just going to take the polling off the screen as I notice I still have it open. Let me just do that. Okay. So RevPASH is really useful for monitoring the revenue per available seat hour. This is the food and beverage revenue. Why would you want to do that? Well, as we bring our businesses back into bouncing back into profitability, it's important to think about how we use the space. And we may well still have some restrictions in place as well. So thinking about the revenue per available seat hour, how many seat hours we want to have, how often, how frequent our business is going to be open, and for the length of time. And then average spend, I'm sure we're all familiar with that ratio, and seat turnover, and some of the other percentages from the food and beverage income statement. So preparing for bounce back, and we've already talked about the light at the end of the tunnel. Take a helicopter view of your business. You've all got some amazing assets that you're working in, hotel properties and so on. Take a look at the overall picture of your business. Now, I appreciate this is not a great picture in terms of working assets, but what I wanted to illustrate with this is taking a helicopter view of your total boundaries of your property and thinking about the revenue that can be generated across the whole of the footprint of your business. We talk a lot about RevPAR, TrevPAR, GoPAR, but revenue per meter squared is a very useful measure to be thinking about. And that's based on looking at the total footprint of your business operations and the gross operating profit per meter squared as well, and even the EBITDA per meter squared. And during this time, thinking about the business and creatively considering all the different possible revenue opportunities, and there possibly will be some new revenue opportunities as well. In the Q&A, I've got a question about prepayments and accruals as opposed to month invoice-based accounting. So the profit and loss account, I'll just set back a few points here with this. The profit and loss account is based on what we call accruals accounting, and it's important for us to be able to match the cost to the revenue to see whether we're profitable. So that view of your business is really important. It's also important to have the cash view of your business. So both sides of management accounting, the accruals basis, looking at the profit and loss account, and looking at the cash flow are equally important. So just giving you different perspectives on your business. But thank you for that question. So moving forward, take a helicopter view of your business and measure the impact of your strategies. And so some points to summarize as we come to the end. Review the total footprint of your property with fresh eyes. How have your customer needs changed? Will your customers have changed, and what new markets exist? And we said earlier in the 7 points for profitability, review the cost structure for each of your current products and services, and then think about costing out any new activities that you're planning as you reopen, and measure the performance of your business on a week-by-week basis, and use competitive set data if you can as well, so that you can chart how you're doing against other businesses in the same sector. So bringing our points to a conclusion, review your variable and fixed costs to really help your cash flow at this time, and plan for purchasing your inventory and the staffing costs, and use that month by month or even a week by week format in order to understand where the peaks and the troughs are going to be in that cash flow, and keep those forecasts updated. So keep the cash flow forecast updated every month or even every week possibly, so that you've continually got the latest position, and then you can think about, well, what actions do we need to take? And for profit, do you know your most profitable products and services? And what do you want to sell more of? So as the business comes back, what do you want to focus on? What's going to help you to get back to those levels of GOP that we were enjoying 12 months ago? So really thinking about that strategy for the future. So at this time, it's really important to work on your personal brand. I know that many of you are in all different situations. Perhaps you're on furlough, maybe you've lost your job at the moment, or maybe you're working in a very reduced level of business activity. But it's really important to use this time to keep learning. There are lots of opportunities out there. The MasterInnholders, of course, have launched this fabulous new initiative. There's lots of useful material on the UK hospitality website. And if you click the careers tab on the UK hospitality website. You will find some useful information there for different areas within the hospitality business. The Institute of Hospitality has a great weekly series of webinars, sometimes twice a week. So great to tune into those as well. My own company, Arena for Finance, we also have a regular program of free webinars, things like how to calculate your break-even point, how to price your menus. So we have a series of 1-hour sessions on those topics. And if you're looking to perhaps look at some slightly different topics during this time, then have a look at websites like Coursera and Udemy that offer a range of free courses. So in your own finances, if cash is a bit tight at the moment, then have a look at what those particular sites offer. A massive range of different courses, and many of them are free to take. So keep learning, and be thinking about how you can develop yourself during this time.